Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Wednesday the 12th of February. This risk recovery that we've seen in the last few sessions is continuing, not at a pace at which you might expect, but is still edging higher. We've seen that there has been a corner turned potentially on Treasury yields, which are edging higher now on the 10-year and the 2-year. We've seen the Chinese yuan, which is beginning to sort of hold consistently below 7 again against the dollar, so that suggests sort of strengthening, although a tick of weakness or so early doors today. We've seen the oil price starting to form a little bit of a recovery, and you'd certainly want to see the commodities complex starting to pick up if the market is seeing the top of the coronavirus as being sustainable. Now, we have seen signs that the number of new cases on a daily basis are now beginning to reduce, and that is certainly given a bit of a signal for a risk rally. The question would be, I think, the ongoing legacy of the coronavirus, given how it's affected manufacturing in the Southeast Asian region, how it's affecting supply lines, how it will affect growth figures going forward. So it'll be interesting to see how the markets respond to that in due course. But for now, there's an edge back into risk appetite, which is helping to see the yen weakening, helping to see gold coming off the top. The dollar has been strong, but it's just an early sign today of just maybe starting to fall over as sterling recovers, as the euro dollar starts to pick up as well. So interesting moves that we've got on these markets, but nothing too decisive, I would say, as of yet. Now, in terms of where the big movers today, let's go back on here, and we can see down here the Kiwi dollar. Now, this is interesting because yesterday we saw Fed Chair Powell giving a fairly upbeat statement on the US economy and saying that they were closely monitoring the coronavirus. Now, New Zealand is a little bit more tied to China economically, and subsequently the RBNZ, the Reserve Bank of New Zealand, monetary policy decision overnight gave a little bit of caution to the coronavirus, but it held fire on rates and it removed its easing bias on growth. Now, it did suggest that needed to be a little bit careful about the coronavirus and the impact of it, but broadly speaking, it's just sort of taken rate cuts off the table for now, and this Kiwi dollar has bounced quite significantly, over 1%. The Aussie dollar, again, also bouncing quite strongly today. So that is certainly a bit of a risk-on move, and the markets are, responding quite strongly to that. So that is the main FX mover overnight into today's session, and we're looking out for no real data points today. We've got the oil inventory levels today at 330. Expected another build of around about 3 million barrels. Which would be a third week in a row of around about that sort of level of inventory build. So if that build comes in underneath that, then again that would be supportive for the oil price. So we'll be looking out for that this afternoon. It is day 2 of Jerome Powell's testimonies, so that might have an impact into the afternoon, but broadly speaking, he's pretty much played a straight bat yesterday, and I can only imagine he'll be doing very similar today. So that takes me on to my chart of the day, which is the Canadian dollar. Now, I spoke about this last week as the market was approaching this key resistance band. I've sort of been saying over recent months that 133 to 133.50, there or thereabouts, is a key resistance area. We saw 33.30 find a high on Monday, before a sharp move to the downside yesterday and another move to the downside today. Look at the impact this is having on momentum. RSI back underneath 70. Now, the importance of that is quite significant because that happens very rarely. When it does happen, it happens after obviously strong bull runs, but that is a consistent sell signal. Sometimes on a near-term basis, sometimes on a more medium-term basis, but it is a consistent signal to say that the top is in place. Now, the support you'd be looking out for in this scenario is 32.60, that reaction low from mid last week. That is your first higher reaction low of the, sorry, that's not Canadian dollar, first higher reaction low of the of the bull run, and you can see that I stick the line in it, that it's been sort of testing that level today. Held so far, but look at the momentum on the hourly. MACD lines more consistently negative now. RSI failing around the 50 mark, moving towards 30. That suggests that at the very least a consolidation, if not a topping out. So this is moving towards that sort of level now. So we've seen the momentum indicators, which is starting to roll over on the daily chart and the hourly chart. And as I said, a move below 32.60 really does open a corrective move. You then start to look towards the old pivot levels, really around the middle of the of this sort of medium-term range. 32 figure seems to be a pivot level. Market consistently sort of has used in the past, so a drift back towards there, maybe even 31 figure. Again, a more recent pivot around December into January. Yeah, it's a few levels to work with there on a renewed corrective move, but this bull run seems to be running out of steam now, so interesting on that Canadian dollar improvement. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.